shit is dope.
Yo,
We
What
are
was that?
okay. Hold up. Okay, there you go.
hey, what's up, guys?
What it do, man? Give us a short intro, man.
Welcome to Young Money, where three friends come together and put their minds together to talk about the trades, how they got into the trade, what we're gonna do, and how to really grow our investment account. Today, live every single morning with us is gonna be Michael, Mr. 0 to 50K a month, Amazon, Shopify, and 100% part-time extraordinaire. Felix, also known as Credit Felix. This guy is the man for all your financing needs. But he is not a financial advisor, and none of us are. And my name is Fro, and I am a sales guy, but now I'm here to just really talk to you guys about my trades. So let's go ahead and jump straight into this. Actually, before I go ahead and do that, if you didn't already, smash that like button and go ahead and hit subscribe. We won't actually see, you guys won't see any of our videos. Smash the wall button.
Like, subscribe down. Appreciate
You
it.
guys won't see any of our videos if you guys don't hit the subscribe button, and you guys won't see any of our mindsets. So grow with us, learn with us, and let's go ahead and let's get it.
Awesome. So I'm gonna start sharing my screen. I guess our first topic can pretty much discuss about the stimulus. So what's currently happening, and then what are some of the trades that we're pretty much going into for next week or for this upcoming week?
Yeah, and I think honestly, I really got into this trading with the stimulus really heavily because of the research that Mike was doing.
Yeah.
Really, I think all of us really got heavy into it, and I got heavy when Mike started asking about trading, and then he started doing a lot of research on his own. So honestly, I would have to tip my hat off to Matt, to Mike on this one.
Again,
Okay, let me share my screen. Can you guys see my screen?
no, it's
Chart?
no. Try pressing share again.
Share screen.
Okay, there you go.
Okay. You can see it?
Yeah.
Okay, so like Fro said, this all started like 3 months ago when we started looking at the stimulus trades. We saw a lot of money pouring into the markets, and so we looked at the SPY. The actual day that the first stimulus bill was signed was on March 27th. This I think this was a Wednesday. So we looked at the S&P performance 2 days before. From the bottom to the top, that was a daily range of plus 7%. Then 1 day before the stimulus bill, it was plus 9. On the actual day of the sign-in, plus 4, and then the day after, plus 3. Now you got to keep in mind that the average daily range of the S&P or in SPY specifically is about 1 to 2%. So this is like 2 to 4 times the average daily range that we usually see. And if you are playing the actual underlying asset, if you're buying stocks and shares, then that's a good percent return. But if you're playing the options, and in this case call options, this 7 could turn into a 700%, 900%, 400%, and 300% on these prospective days, because we've seen that typically for every 1% move in the underlying on SPY, you'll get about 100% move in the call options at the money. Weekly expirations.
Got it. And then, do you have information on when was this publicly informed for the stimulus? Or it looks like for the past, if you're looking at the chart that you have put up, it looks like it's already building up to the point where it's already pricing in throughout this entire week. So is it officially announced on like 7 days before they actually can sign, or what was?
Sorry, you were breaking up. Can you say that one more time?
Okay.
Sorry.
I was asking, when was it publicly announced that the stimulus checks could be signed?
Oh, in March, I don't know. I wasn't trading back in March, so all of this data that we collected was all just retrospectively looking back at previous stage charts. I think we all did some research to look at different news articles and press releases around that time, and it wasn't like there was any set date and time that they said this is exactly when stimulus is going to be. It was pretty much things were pending in Senate and House and just negotiations in general. And then all of a sudden we have a date that they're voting on it. And when it gets signed in the House, that was this first one, this March 25th, signed in the Senate the next day on March 26th, and then signed by the president on the 27th. So that's kind of similar to what we're seeing right now with the December, the second stimulus bill that we're, I think it just got signed as of a few hours ago.
Yeah, but this time it was opposite, right? Instead of the Senate to the House, it was the House and then to the Senate. I remember you were saying something about that, Fro.
Yeah, so the House was supposed to sign it first, and then they throw it over the fence to the Senate, and then from there, obviously, you have Mr. Trump that signs it into office, and in between all those handoffs, you have the legal reviews and whatnot. But yeah, today we have the Senate and the House both signing it into the office, which was very interesting. So tomorrow would be the legal review and Mr. Trump signing it in. So a really interesting day coming into today. And what I think what you have to keep in mind when you look back at the stimulus number one with Mike's screenshots, or if you go back to your own charts, you'll see that we were actually in that downtrend. We were in that V, right? And at the very bottom of that, the very bottom in March, that's when we got stimulus. So obviously that was a big, huge like steroid shot to the arm, injection line of cocaine or whatever. It was huge for the market to bounce.
Yeah, March was right around here, right at the bottom of this huge panic.
Right. And so I think what everybody was thinking back then was like, oh my God, we have to do something because obviously everybody's 401k is going off. No one's going to retire. And now you have all-time highs, not just like for the year. I mean, all-time highs for the S&P, for SPY, for QQQ ever in the world during a pandemic. And now we're talking about another stimulus. And which brings the question probably why do we need another 1,200 or what have you? Where the second stimulus be just as effective for the stock markets? Will it bounce? And I think that was really the big question going into today. And so that was my mindset that, hey, maybe the stimulus isn't that great right now because obviously you had that huge sell-off going into the morning. And I'm transitioning into today's topic and my mindset going in today because it was a very interesting one. I think Felix, I think you played this one with a little bit of heartburn in the beginning.
Oh my God! Yeah, just to give you guys some context, I woke up. It was like what 4:20, and I guess it was only Mike that was on. For I think you were still sleeping. Head on to my computer and then watch the SPY, the VIX, and then also what else? I don't know, some of the other positions that I was in. Quickly, I got in. There was a small dip, I believe, right? Pricing in, coming in, doing market open. I think.
Yeah, it started selling off right out of the open.
Yeah, so I waited 10 minutes to get onto the dip, and then it quickly rebounded a little bit, and then dipped like a small percentage again. And at that point, I'm just like, fuck, I'm really concerned. Like I'm looking at these tweets, everybody's talking about the new strain that's happening in like Europe and whatnot, and I was just like, maybe today's not a good day to pretty much hold my weekly buy calls. And then this market was beating at the same time, right? All my other calls were like down at the moment, so I'm just like, okay, let's wait for the market to stabilize. I'm gonna head back to sleep, clear my position, and then get back in. And when I woke up 3-4 hours later, I saw like a 20 messages from you guys. Like, fuck, I'm 20% on SPY calls. I'm like, fuck, man. Dude, I missed the greatest opportunity. Literally the opportunity that we've been fucking planning days and days for. So I was myself. But I hopped back on after and we're able to make what 10% on the SPY calls within like 1 hour. But right now I'm still holding the weekly calls that's expiring on the 25th, so in 3 days. And also keep in mind, guys, that on Thursday we're closing early for the market, and on Friday there's no trading. And Merry Christmas.
And Merry Christmas. Merry Christmas.
Yeah, so today was really tricky. Like Felix said, there were headlines that the new strain of coronavirus over in the UK, it was scaring everyone. They were doing lockdowns over in Europe, and people were thinking that the vaccines might not be as effective as we thought they would be. So market was selling off. It was looking like it was going to be a red day because everything was gapping down. NASDAQ futures, Dow Jones, SPY, a lot of the big tech names and blue chip companies. But as we got into the afternoon, right around like the 11:30 a.m. Eastern time, which is right around the close of the London Stock Exchange over in Europe. I don't know if that had any coincidental timing to it, but things started to heat back up and we had this huge bull run. As you can see, if we zoom in closer, after it reclaimed VWAP and broke above, the 9 EMA never crossed below the 20 EMA until all the way over here. So that's about, let's see, what is that? From here up until here, that is 2 hours and 54 minutes of straight bullish price action. And that's a 1.16% move in the underlying. Fro, how much did you make on your trade today?
I mean 60%. 60%. And I scaled out slightly every single time the bars started touching the 20 EMA. But I knew based on stimulus and based on my research that, you know what, if I'm going to scale out, I'm not going to scale out that much. I'm going to just get rid of one contract, 2 contracts. I mean, I got like 20 not 20. I would love to get 20 contracts. I only got 11 contracts deep into this, and by the end, where the peak of where your hand is, where your cursor is at 1:58 or 2 o'clock Eastern time, I probably would. I think I had like 6 contracts left, so I got rid of 5. But the last hour, I only had about 4 contracts left, and then I still have one till tomorrow just to carry it over because it's such a big win, and opportunity for a gap up, it's more likely than not, and if anything, I'm just letting my profits ride for me. So I'm pretty excited for that.
Love it. And then just for the viewers to really understand kind of like the indicators that we're using, can you guys briefly go over why you use the 5 and the 9 EMA with the 20 EMA and also the VWAP? Like why do you guys plan on using that, and what's the difference between using that compared to like the RSI or other indicators?
Okay, yeah, I'll start off on that first. So if you take a look at, I'm using Thinkorswim as the broker. So I only use 5 indicators on my chart: daily open, previous day close, the 9 EMA, which is the exponential moving average, the 20 EMA, and VWAP. And then I turn off the top and bottom bands of VWAP, so it's just the middle band. If you look at this on the chart, these white lines, this white line automatically generates from the previous day closing price, which was right around here. And then this line auto generates on the daily open. So right when the market opens, it creates a line there. And the reason why I have that is because I want to be able to see the daily, the gap up or gap down. I want to be able to also see those because those tend to be key resistance and support levels. When the actual candlesticks are going above or below these levels, it means that the stock is going red or green on the day, over the previous day close line, and that's something that a lot of traders look at. Now, I mean, it's not an exact science. None of these technical indicators are, but the more people that are looking at the same thing, it becomes a self-fulfilling prophecy. So you'll see a lot of times the price action will bounce off of these levels. The other ones that we look at are the 9 EMA, the 20 EMA, and VWAP. VWAP is this middle pink line, which is the volume weighted average price. Pretty much just saying this is the volume times the price of every trade throughout the day and plotted out on the graph. It's pretty much telling you where the fair price is. If you're buying above VWAP, then that would be you're buying above the average price, and if you buy when it's below VWAP, you're buying at a better price than the average of the total daily traders that day.
So entire day then. Okay, the weighted average of the entire day. Got it.
The 9 EMA and the 20 EMA are moving averages. So the 9 EMA takes the last 9 candles. If we're on the 1 minute, the 1 minute chart, that takes the last 9 1-minute candles, takes the average of those, and then uses its formula to plot out the average price with this green line. If we zoom in really close, you can see that green line. And then the 20, it's the exact same thing, but it takes the last 20 candles. And if we were to change this to, say, the 5-minute chart, these lines look different because it's taking the last 9 and 20 5-minute candles as opposed to the last 9 and 20 1-minute candles.
So would you say that the 5-minute candle is pretty much better for like longer type of calls, or can we use that for weekly calls as well?
This setup that I have on the screen right now is what we use for day trading when we buy and sell within the same day. But if we're looking at a daily chart or even like a 1 hour or a 4-hour chart, I prefer to use the EMA. I have these different study sets saved in here. So this one has the 20, the 50, the 100, and the 200 EMA. And this will show you the last, instead of 1-minute candles, it's using the entire day candle. So you get a lot more data put into these moving averages. And when we see the candles retrace back to one of these major moving averages, that would be a good time to buy on the dip. For example, down here, back in March when we had the pandemic, huge dip all the way down here, like significantly below the 200 moving average. And if you were to buy at any point during this dip, you would have had a great swing trade.
Love it. And and then this pretty much brought me to the next topic. So you pretty much discovered like a new indicator that we can use moving forward, right? By looking at crude oil futures, and then the VIX futures as well. Can you touch a little bit in terms of what analyze that and kind of like what are the correlation behind that as well?
Yeah. Actually, Mike, can you actually go on your screen? I think yours is pretty good. If you can you do /CL and /ES?
Okay. /CL.
Yep, and then that's the
/ES.
Yep. And then we just need to look at we could just look at today for the intraday.
Okay. So today would be from this pink line onwards.
Perfect.
And I guess
All
we
right.
can compare that to the SPY as well, so we can see the direct movement.
Yeah. So there's this theory that's out there that crude oil, the crude oil futures, and in the futures game, and basically this is saying that what we're predicting that the future of oil prices will be, or the S&P 500 will be, which is the /ES on the top left, and then the crude oils on the top right. That the crude oil would actually, if it's going up or it's going down, that would be like about a couple minutes faster than the S&P 500. So basically, that you could predict what the S&P 500 would be based on the /crude oil futures. I mean, obviously, nothing's an exact science, but it's another good indicator for us to determine like that a drop would happen or a spike would happen faster than usual, or maybe we should look to take profits for something, or maybe add to our position for a certain stock or option, whatever position that we're kind of in. Today, crude oil actually dipped down first, probably about 5 minutes. I mean, it wasn't that drastic, but I mean, 1 minute, 5 minutes is better than no minutes. I had to plan ahead for any type of stock. So, and then
a good example of that is actually right here towards the top. I just zoomed in a little bit, but you can see the price action was very similar. We had a spike up, came back down. Similar here on the crude oil, spiked up, came back down. But we actually saw this big red candle on crude oil. Like Fro said, it was almost exactly 5 minutes before this candle printed over here. So it's not, I mean, if you look at these charts, it's not exactly the same. But when it comes to a big move like that, where you have this big red candle, you might want to get out. You have an extra 5 minutes to make that decision and get a better exit.
Dude, that is insane. Good catch on that.
Yep.
Yeah. You guys want to follow that trade throughout the week, following crude oil, and then with our SPY futures, and then after that, the SPY calls.
Absolutely.
Yeah.
Go ahead. And another really good one too is to also look at. I don't want to overcomplicate things, but // for the VIX. Yes. Maybe make sure I got the correct one. Yeah, /VX for the VIX futures. So taking a step back, and obviously this is like trading like 10.0, but the VIX is basically your volatility index to say that if it's really high, that means you're going to have a lot of swings in the marketplace, maybe a lot of bearish movement, a lot of down movement. And then when it's low, it's most likely going to be trending up, less volatile, and a really smooth, easygoing chart. And basically, when you have anything that's called the futures, when you're predicting the future of volatility, that's pretty much what you want to try to see as a trader. That if I'm going to be holding something overnight, I want to look not just at the VIX, but the future VIXs, so /VX. Because if you look just at the VIX, you don't account what's happening overnight. And as you could tell, and what Felix, Michael, and I, what we really get into this pandemic in terms of trading, what we really switched our views towards is that we're going to look towards options trading. And SPY and QQQ options can be very lucrative. And hopefully, when you guys take all of this into account, then you guys can make a lot of money as well. Again, obviously, we're not financial advisors. We're just doing some of our research, and hopefully we could help you guys as well.
Yeah, make sure you guys have your risk tolerance in place. I mean, for us, we pretty much know how much we're putting in, and we're confident with like losing that much amount of money, right? So just make sure at the end of the day, if we do give like any advice, just make sure the money that you put in is something that you guys can lose on your side, right? At the end of the day, we don't want to be responsible for any losses. At the end of the day, it's an educational type of content for you guys, just so you guys can learn along the way, right? We're not 100% right, but we do our best to show and be transparent with all the little details that we pretty much went through. So, just a disclaimer. Bang, bang.
Okay.
Dang, dang, boy! Dude, this is going great so far. Like, fuck. God damn.
Yeah, hats off to Felix for really diving deep and getting this channel actually kicked off.
Yeah. Okay, so this is what happened. Like, Michael told me that, you should do like a recap video, weekly recap video for our fund. Our fund is called Sigma Capital, named after our fraternity, obviously. So we're all three of us are in Kappa Sigma. And then I was like, okay, I feel like I'm gonna push it back for a couple of days if I don't start doing it now. So I decided to take the Adderall and start working. Once I took the Adderall, I was just like all hyped up. I was like multitasking, watching the stimulus play right now. Watching, okay, I'm gonna create a YouTube channel first. I would create one of these accounts to reach the IO. Get a developer for a Discord channel as well. So if you guys don't know, we're gonna create a free Discord channel, a community channel for all of you guys. So if you guys want to watch some of the training videos that we pretty much upload, then feel free to join. I will include the link down here when it's actually ready. Right? So yeah, I'm glad that we're actually doing this because I feel like at the end of the day, there's so much knowledge that we have and that we're doing a disservice for the community if we don't share it. And I want you guys to learn with us. I want you guys to support us and to grow and pretty much make money together. That's my little TED talk.
Wow,
Right
that's
there,
it, dude. Can you stop sharing, Mike? I want to share my screen and show my madness going into today. All right, so there's a lot going on really in my screen, and I have a lot more indicators than Mike, and essentially, obviously, when you're first trading, you don't see any of this, and if anything, you have VWAP or MACD and RSI. But really, what I'm trying to play around with right now is a bunch of the EMAs, is the 5, the 9, the 20, the 50, and the 200. Which is you could basically hardly tell from this candles, but let's go ahead and zoom in. The 5 is the blue, the 9 is the yellow.
that's the dotted.
The 20 is the pink. The dotted line, this dotted line right here is the 50. It's very important to me, but I hardly cross it, so that's why I make it a dashed line. And this is the 200 for me. Again, we hardly cross it, but that's why I have it as a dashed line. A friend of mine let me know about some standard deviations to put in, so I have those as this dashed red lines. And you have the VWAP. My VWAP is this white dashed line, and then you have the upper and lower bounds of VWAP, which is this pink one. And if I zoom out a little, you'll see the lower band way down here. But a lot going into today. I mean, there's this theory about buy the rumor, sell the news, or sometimes you would hear about stocks that have the price being built into it. Right? I think a perfect example is a Pfizer vaccine, a Pfizer stock, PFE, a couple days ago or a week and a half ago when that vaccine finally got approved. It was a lot of madness going into it. You see the stock going green, printing. And the day before the actual approval for the FDA, or the day after it got approved, it tanked. The day after it tanked, and the day after that it tanked. And what happened was the price was already built in, and yeah, it was really the sell-off. So you buy the rumor, you sell the news. Going into today, I actually wasn't trading in the morning. I woke up a tad bit late, so I woke up to this madness down here, and so I thought this was the classic buy the rumor, sell the news. That the stimulus play was already built in, and that we're going to be red for the day. So initially, when I saw the group chat with Felix and Mike, I saw Felix saying I sold, and I was like, oh shoot, all right, you know what? I'm going in, I'm going in on puts. So I bought a couple contracts on some puts coming down. I wrote it down to -5%. And then it did a lot of this action, up and down and up and down and up and down. And these indicators to me, a bunch of these arrows and down arrows, how it crossed over these moving averages, to me, it's like, all right, I don't know yet. I'm gonna give it some time. I'm gonna let it pan out. But after it didn't break this lower candle over here, and I didn't make any lower lows, that to me, and I started making a little bit higher highs, lower lows and higher highs are bullish price action to me. And that to me was some indication to get out. If we zoom in a little bit closer, I bought my puts here and I rode this craziness for a bit. And I think I got out like here or here. So I saw this right here, this, oh gosh, I don't want to zoom in. I saw this higher highs and lower lows on these candles. And I said, all right, I need to get out. And I switched my bias to a call option. Once I saw this blue cross the yellow and the yellow cross the green. Oh wait, basically the 5 and the 9 are basically over the 20 EMA. That to me was a strong buy signal, and that's when I initially got a couple contracts. I then added to my position once it crossed VWAP over here. I was okay because I'm above my buy signals. So I added to my position over here, and then I rode that wave all the way up to the rest of the day. And I was actually very surprised that it just kept going at a really straight line. It was a beautiful, beautiful chart. Oh my God. It was literally just this beautiful channel. It just rode this 20 EMA all the way up. And then when it broke this 20 EMA, when these candles broke this 20 EMA, and that's when I got out of most of my position. And so that's why I kind of encourage everybody to look at multiple buy signals. Before I used to look at MACD and RSI, and obviously you can use that for buy and sell. But to me, that they weren't as sufficient as these moving averages for us. And I think we've tried a bajillion things. And honestly, probably next week I might not have all these things on here, but right now it's just testing it out to see. What's really interesting over here is that you see that this is the standard deviation 2. This is 2 standard deviations. This is 1 standard deviation, and this is the middle at node standard deviation. It's really interesting that at the 2nd standard deviation, that's when that sell-off started happening. And it followed it actually pretty nicely too. So as Felix said, I have these indicators up here because I have the most common ones, the most ones that people have, and the ones that most people are looking at as a buy and sell or become a self-fulfilling prophecy. And that's probably when we should be getting in or out of a trade. Like I said, not one indicator is just enough for a buy or a sell. I use all of it in conjunction to me to show some conviction to say, yeah, I'm comfortable with this trade. I'm comfortable with my sell, and I'm ready. And it's really creating that game plan. Before, it was more of a buy and hope. You read the news, and most traders are like that. They see the news, they see, wow, Pfizer vaccine, buy. Wow, stimulus, buy, or this, buy. And I think that creates this trap. And it's a really inconsistent one because what you really need to look at as a trader is really some key indicators. And if anything, at least add the VWAP in there, because that that at least it gives you the if you're overbuying if you're overpaying a price for a stock or underpaying. So yeah, I think today was such a great trade. What do you guys think about for tomorrow? What are you guys looking for the next day, for day two, the day after everything got signed in?
Well, we can't predict what's gonna happen tomorrow. That would be impossible. And I think I wouldn't encourage any of you guys, if you're watching, to try and predict what's gonna happen either. But if you're using the strategy that Fro just explained, you can play the upside tomorrow. And I think my opinion is that there will be a strong bullish price action tomorrow as well, based on the last stimulus that we had. There was bullish price action the 2 days prior, the day of, and the 2 days after the bill was signed. So I think even if you didn't get in on the action today, you have a lot of time to get in on the action tomorrow, or maybe even a few days into this week. But just be smart about where you're entering. Like Fro said, look at multiple buy confirmations and don't just hold and hope. If that position is going against you, you have to know what your risk is. Get out of that position, and you can always re-enter again if your buy confirmations are met.
Nice. Yeah, and then kind of like piggybacking off of that, I feel like, yeah, cut your losses quick, guys. For us, or for me personally, I try to cut my losses if it's down like 10 to 15%. What about you, Phil? And like, what are some of the percentages that you guys look at before exiting a trade?
I think that's a good example. I think my put option was a good example of me cutting my losses. Like I said, I got in right over here. The 5 was below the 9. The 9 was below the 20. The 20 was below the 50. The 50 was below the 200, and that was below the VWAP. All signals point to a bearish price action. The markets are red, and maybe it was a sell the news type of environment. My risk for this was when the 5 crossed. Was when the 9 crossed the 20. So if you see this yellow line, that's the 9 EMA. That yellow line crossed the 20, the pink line right here. And I waited for it to actually close. So I got out at this strong green candle at 5:52 a.m. Hawaii time. So that's 10:42 Eastern time. And so I pretty much got out. I think I got in here and I got out over here. So it was around like a 3% loss. So that to me was my defined loss. I didn't have any emotion. I said, this is my loss. Once it fulfilled, I cut my loss.
Love it. Love it. Awesome.
Can you guys hear me?
Yes.
Yeah, you cut.
I got disconnected there for a bit. Did did it like cut off right in the middle of what I was saying earlier?
No, I finished your sentence and then you just cut off.
Oh, okay. So, Fro, can you let me share my screen real quick?
Yeah.
I just wanted to go over. Okay, so I wanted to go over my entries and exits today as well on SPY. You guys can see the screen, right?
Yeah.
Yes.
Okay, so right out of the open, actually, let me pull up this note. There's this checklist that we go off of for trading momentum for call and put options. I'm not going to read this out to you guys, but you can like pause the video and read through that. Pretty much what I was doing was I was waiting the first 15 minutes after the market opened. I didn't want to get in too early because the first 15 minutes is super volatile. You'll have a lot of fake movements where it might spike up fast or it might go down really fast and then it reverses. So I let that volatility kind of sizzle out. And we had a crossover of the price action going down below VWAP, which is typically a bearish a bearish signal. But for me personally, I don't play the short side. I prefer to only go long. And so I didn't enter on that VWAP crossover, but I was waiting. I was waiting for the 9 EMA, which on this chart is the green line, the 9 exponential moving average. Once that crossed over VWAP to the upside, that was my initial entry. So you'll notice if we zoom in really close here, that when it crossed over, I wait until the end of the 1 minute candle. So that was actually this candle here, where the candle closed and the line had crossed over. And my risk was going to be if the 9 EMA crossed back below the 20 EMA. The green line, if it crossed below the red line, I was going to sell my position, right? So we entered. As you can see, there were some times when the 9 EMA came pretty close to the 20 EMA, but it never actually crossed below. And right up here, the 9 EMA crossed below. I waited till the end of the candle. This was a 1 minute candle, so I waited till the end of the minute, and it closed. It confirmed that it had crossed below. So I exited on this candle over here. And that was roughly about, I believe, 100% gain on the option. It was a really great trade.
Beautiful trade, man.
That's a beautiful trade. That's a beautiful trade. Yeah, now I think what I did, and the reason why mine became only a 60% gain, is I started adding incrementally as the price confirmed me going up, and then I think obviously that destroyed my percent gain, and then I let a few ride after even it crossed over the 9. The 9 crossed down over the 20 because I was gonna hold those till tomorrow regardless. So.
Yeah, I think we all ended up holding a few contracts overnight, right?
Yeah. Yes.
Yeah. So typically we wouldn't. Typically we would say don't risk it overnight because you can't trade the options in after hours or pre-market. Even if the stock is tanking or spiking without you, like you can't do anything. You can't trade the option. So typically we say don't take the risk. But in this case, all three of us agreed. We were talking on Zoom and we kind of agreed, you know what, maybe it's worth it because we have the stimulus that is being voted on within just a few hours of the market close. That's a really strong catalyst. And if it does pass, which it did, we think that's a strong positive catalyst for tomorrow for a gap up.
Oh, absolutely. I'm fucking excited, man. So I guess we can do like a breakdown of what the stimulus consists of now that it's passed. Let me see if I can share my screen on.
Yeah, Michael needs to just stop sharing his.
Okay, let me put this up. Oh, nice. It's pretty nice. Let me shrink this.
She had a Burberry get up over there. Let's go.
Is this better? This is better, yeah. Okay.
That's good.
There you go.
I can see.
Awesome. Breaking down the 900 billion stimulus package on 1.4 trillion bill. God damn. All right. So individuals making up to $75,000 a year will receive a payment of $600, while couples making up to $150,000 will receive $1,200 per hour. They will make the stimulus check more aside immigrant families. You know what's funny? Last stimulus check, they were sending like 600 or 1,200 checks to dead people. Have you guys heard about that article? That one article?
No way.
Yeah, people are just finding the craziest way to get this money.
Wow.
Around the $120 billion an extra unemployment help. Worker will get up to $300 per week in federal cap through March 14. Okay, self-employed individuals, gig workers, and those who exhausted their state benefits. And then 325 billion small business boost, which of 284 billion in loans through the Paycheck Protection Program. Nice. Do you guys?
And I believe that Paycheck Protection Program, what they were saying is that if you actually signed up for the PPP on the CARES Act, the first go around, that you would not actually have to pay it off, and your debt is wiped out.
Really?
And for this upcoming stimulus, I may be wrong, and but from my research when I was looking at it, that's what we're looking at, and we could re-verify again on our Instagram. But that's huge. I mean, there's a lot of really good things. Obviously, from this, the $600, it's really just a slap in the face, but at least it's something for the American people.
Yeah.
It took them long enough, and the really cool thing in terms of trading is that this is going to be a part 3 next year, and an even bigger package.
That's crazy.
Well, that's the controversial part, because with the vaccines coming out, 2 of them that are showing to be effective, it's not long before we get herd immunity, and we might not even need a 3rd stimulus package. Biden keeps promising that he's going to have one in January, but we might not even need one. And given how it took Congress, 6 months or more to pass the second one, do you guys really think we're going to get another stimulus package in January?
Yeah, and true. And will it actually do anything for the economy in terms of stocks?
Stocks only goes up from this point. Well, what is this? Border wall status quo. The government funding portion of the year-end package will maintain nearly 1.4 billion in cash for Trump's border wall, in addition to 20 million for new border processing coordinators. This is absurd. Like, why the fuck do we need a wall from this point on?
Yeah, why is that in the stimulus package?
Okay, so there's another 45 billion in transportation aid to help airlines maintain their payrolls, 14 billion for mass transit, 10 billion with state highways, 2 billion for. Okay, so it looks
Speaking
like
of which,
states
today, Boeing, the 50 EMA, just crossed the 200 EMA for a Golden Cross opportunity.
Oh yeah, Felix and I got in on that one. Did you end up buying it, bro?
I did not. I had all my capital into. I got all my capital going into stimulus, but I will be looking to play this Boeing play because this looks beautiful. When did you guys buy in this morning?
We bought it
We bought 2 days ago.
Yeah.
Oh, okay. So you guys are still rebounding then.
Today
was a rebound.
The thesis behind it was that it was a rebound, like with the vaccine. It was a bounce back play where once the economy goes back to normal, people are going to start flying again. Government's going to give the airlines support through the COVID relief, and going back to a normal traveling, like business travel, leisure travel, all of that over the next 1, 2, 3, maybe even 5 years. I think that looks really good.
It does
in
look good,
addition to the fact of, like you said, the 50 EMA was crossing over the 200 EMA to the upside, which means that the short-term price action as it is going right now looks like it's going to be, it found a bottom and it's coming back up, essentially is what that means.
It's beautiful, dude. And you know what? We're right now 50% of the drop from its peak. It was basically at $400 before the pandemic, and now it's at $200, $220. So a lot of upside potential for this. What expiration did you guys do?
I went with 6 months.
I did February.
Nice.
Yeah.
Nice. Cool. Price billing.
Yes,
Where
I
I
went with June 18th, 2021, $250 strike call options. Just one contract.
beautiful.
Got you. Nice.
Yeah, going back to
Yeah.
the price building, I feel like this is super important because what I heard recently is that a lot of these people that are diagnosed with COVID, when they actually finish or when they're actually in the hospital and they finish their cure whatsoever, their bill came out to like over 10 to 12K, and they weren't informed about the little charges these hospitals were making at the end of the day. Like if they ask him, "Oh, do you guys want an extra shot, or do you guys want to get this type of assistance and whatnot?" They weren't informed about the price tag that's attached to it. So I guess at the end of the day, this is really good for a lot of current COVID
That's huge.
patients. Yeah.
That actually protects us. That protects anybody. So I like that.
Yeah. Awesome. And then billions for vaccine testing and tracing package includes 20 billion for the purchase of vaccine, nearly 9 billion for vaccine distribution, and about 22 billion to help states with testing, tracing COVID-19 mitigation programs. It's pretty good.
All right. So speaking of vaccines, keep a watch for Pfizer. It just touched the 200 EMA today and it finished green with a green hammer. So because of this bill, Pfizer might finally have a bounce, but we'll see.
Moving forward, let's see.
Rental aid and eviction ban, that's really good for people. Gosh, because a lot of people are getting evicted. That extension all the way to January. Thank goodness.
Dude, and that's 1 month. 1 month. I mean, that's still something. If it's gonna take like a few months to pass a limit, then the eviction ban to like a little bit longer too.
Right.
Food, infusion for schools and childcare, including the 82 billion total for college and university, is more than 4 billion for governor's relief fund. Wow.
Save the teachers. Save the schools.
You know what's funny? I remember listening to this podcast and doing the last PPP that Harvard's endowment fund actually applied for it and got a huge amount of funding, which can really absurd. Like, fuck, they have the biggest endowment fund in the entire state, or honestly, in the entire United States, and they still qualify for some of the PPP funding. Like, what the fuck?
They have the smartest people, though. They have the smartest people in terms of reading the law and taxes and accounting and everything. So if they can't figure it out and how to get money, seeing the loopholes.
Yeah.
That's I think hats off to them.
Yeah, hopefully this time they will put more like restrictions in place, so money can actually be allocated to schools and institutions that actually need it.
Yeah, that was part of what was taking so long with the negotiations was they wanted to specifically target the bill and exclude certain people like pension funds and like you're saying, like the Harvard fund. People that don't need the money shouldn't be getting it.
Oh shit! Look at this. Restricting access to e-cigarettes. I'm literally smoking a Juul right now. Or what do you call this? It's so addicting, man. Like, I would get a new one every 2 or 3 days, and I feel lost if I don't hit it. It's so addicting at this point. So, guys, if you guys have addiction, I mean, check.
I'm addicted to money, and I'm addicted to trading.
Yeah, that's a better addiction than me, man. Personal office, stay independent.
Oh, no, go back up. Actually, this is a really interesting one. A boon for broadband. The agreement invests $7 billion to expand broadband access for students, families, and unemployed workers, including $300 million for rural broadband and $250 million for telehealth. So that is a real key thing there. Let's go ahead and take a look at like Zoom today. I think basically this broadband thing to me screams we need infrastructure, we need broadband, we need to look at AT&T, Verizon, look at all of those stocks, and because all of that means we have all this money and we're going to dump it into these people because you can't. How are we going to have any communication with you? Obviously, everybody knows Zoom, but well, we'll see. So I think Zoom is a really interesting one to take a look at. Some may say because of the stimulus and because of the vaccines, that's is going to be going down. But to me, from that little blurb alone, we have a little injection into the economy, into these communication stocks. So I would keep AT&T or any of the communication stocks. Qualcomm. What's the ticker for that one?
QCOM.
QCOM. I'm going to go ahead right now and make a new watch list called comms.
Yeah, I'm on the fence about Zoom because I feel like after the pandemic is over and schools go back into session, businesses go back to normal, there's going to be a huge drop off in the number of people that are paying for Zoom. Like a lot of people were forced to pay for it to have big like company-wide meetings and that sort of stuff, but they might switch back to their free version, and that really heavily impacts Zoom's bottom line.
True that. And Zoom right now is 116 billion market cap. Freaking incredible.
Crazy.
Incredible. Went to $62 to 588 at its peak.
Oh, the Biden's transition.
He had something interesting in here about 500,000 electronic vehicle charging stations.
What are you
that
drinking,
makes
Mike?
me think of, I got water and Screwball.
Screwball and water.
But that really makes me think of SPE, Switchback Energy, Plug Power, and Blink charging stations.
Yeah, key watches for me in terms of energy are the same exact ones that you just talked about. And all of basically the EV sector. I mean, that kind of translates to me that if you have more charging stations, the EV sector will go and rally. So I have a close eye on all the EV stocks right now, especially with this blue wave coming in, or if we have a whole entire blue wave.
Yeah, especially with NEO too, because NEO Day is coming up, right, in January. I mean, that's a catalyst to top it off.
January 9th.
That's going to be exciting. So just a little context, we're holding $50 calls for what, mid of 2021 or March. I think it happened for March. I'm not entirely sure.
I have it for January 2023. That's a long-term call option that I have for NEO, $50 strike. And then we were also doing the 6-month strike or 6-month expiration. Those are more volatile, but you got less time on them. So we got to get a move soon, which is good. But it hit almost $50 today. So it's looking pretty good.
Yeah, it's at 49 right now. So let's see how much did it move up today? Oh, it's up 5% today. Crazy. I love it. It was my boy for this year. Awesome.
This is such a cool segment, man. I really enjoy this whole entire platform. And us kind of putting our minds together for these trades, because obviously doing it by yourself sucks. You have you have a community behind us, and I think we're kind of building that community just with our friends alone, and at least with us too, being friends from Kappa Sig, and then from just doing our own stuff as an entrepreneur, and really getting into the stock game, and actually not just quitting, because I think all of us had, I don't know, more than $1,000 losses at one point.
Oh yeah.
You know, a lot of people would quit at that point, but I think what made us better than the average trader is the indicators that we have in, not getting tied to emotions, and building this community. And so I think that's what we want for the people joining our Discord and really watching with us, because and we're just all just trying to make money together and just make sure that other people don't make the same mistakes. Because that sucks. Having $1,000 loss, that sucks especially for a beginner. That's their whole account sometimes, and that's very discouraging. That's rent for some people. You know what I mean? So it's huge. So
yeah, and I feel like for the next segment, if you guys are interested, like comment down below. We'll pick one guest to come out and pretty much give us like any trades in general that you feel like can be a potential fit for us, and we'll do a breakdown for you actually. So some of us can do fundamental analysis, Nico and Phil can do like a technical analysis, and then we can show some of the different statistics within the option rather than not as you play. So you guys really understand our thought process behind the trade, right? And I feel like having the community get involved can really help build this brand and build this community together. And on top of that, we're gonna have our Discord chat coming out soon, right? Oh yeah, one last thing. I'm gonna share our profit and loss so far for Sigma Capital. And yeah, you guys can basically go over the trade. Maybe like a quick summary for like some of the trades that we went on. See if you guys can see it. Okay.
It's really small.
How do I extend?
that's what you said.
How about now?
Yeah, that's better.
Yeah, you can zoom out just a little.
What about this? Okay.
Yeah, that's
So I guess when was a recent trade? Okay, this is our trade in the past 2 months actually, or past month. Because our earliest trade is on the 9th or on the 10th.
Try zoom out one more. I want to see if we could try to get it all in, but not get it all in.
Yeah, is there a way you can expand the window a little bit further out?
Oh, that's nice. That's nice.
Nice. Okay.
Yeah. And then you could just take out column C, or you just like shrink column C. There you go.
Awesome.
That's good. It has everything that we want basically in one snapshot. So yeah, we basically just started this not too long ago. And bear in mind that this doesn't have everything that Felix and Mike and I have inside. We really have basically the big trades that we collectively say we're going to get in together, or the stocks that we really want to trade.
Yeah, the ones that we've researched together, or the ones that we've been talking about and actually trading together, that's what we put in the spreadsheet.
Yep.
Nice.
Yeah.
Let's go over the Apple puts that we did. I didn't make too much on it, but Mike, you guys made a good amount. Like,
yeah, that was actually a really interesting one, because we were playing the Apple event. There was iPhone 12 event. Sorry, just a second.
Yeah, basically, while Mike does that, every single Apple event, essentially more likely than not, has a sell off. Now,
yeah, and it's really uncanny. Like it's usually right at the very second when the event starts, the sell off starts.
Yeah, Yep. I for one actually started my puts the day before and swung it to the next day. Hence that $3,000, 100. That was one of my biggest profit in gains. 160%. Gosh, that was a beauty. That was a beauty. At one point it was $7,000, but you know what? This is when that's when greed gets to you, right? And I actually didn't. I wasn't trading with any of the EMAs, and I don't think any of us were. Or I don't know. I don't know if I was actually.
Yeah, we weren't at the time.
Yeah, we were just trading on price action and just hope and VWAP. That's it.
Yeah,
So yeah, that was my favorite one.
it seems like all the biggest profits for our trade are from puts. Like looking at the Nikola put of 3,800 or 4,000. Like, damn. I guess that's our fucking strategy right there. Stay with fucking shorting companies.
Well, if you notice, the big percent gains on the puts are usually only 1 or 0 days held. That one to the fifth column that I'm looking at. And the reason for that is we typically don't swing trade any puts because the market tends to go up over time. So all of our long positions we hold for a longer period, or we're more comfortable holding it for a longer. Can you guys still hear me?
Yeah. We can try to talk.
Hello?
Hello? Can you guys hear me?
Lost my. Yeah, we can hear you, dude.
Okay, so I was saying the long positions, we have longer expirations because we hold it for a longer period of time, right? So we might have it with a 6-month expiration or a 3-month expiration or a 1-year expiration. But the puts, we're always playing the weeklies because we never intend to hold it overnight. So that's why you'll see these big percent gains on here for the puts, because the weeklies have a lot more volatility than the longer expirations.
Really, really good. And also, these puts are during some event, some crazy event like the Apple event, the Nikola. There was that the rumor that he was going to sell off. That's a key thing for us to take into account. So there's a method to the madness when we go into betting against the market that it will be selling off. It's really for that. Other than that, we would generally play the calls.
Yeah, few and far between. Some other ones that come to mind are like the Tesla battery day, or NEO's event that's coming up on January 9th, 2021. That one could potentially have similar sell the news action. FDA approvals like Pfizer and Moderna typically have a sell-off. But you do have to be careful because we're saying typically or usually because it doesn't happen 100% of the time. And if you look at Moderna today, Moderna got its FDA approval on the weekend. Monday came around and a lot of people were expecting it to sell the news, and it just went up huge, both the day before and the day of. So just got to be careful on these.
Yeah, and that's when you really have to look at your buy confirmations, right? For us, it's the 5. For me, it's for 5 over the 9. For Mike, it's the 9 above the 20, above VWAP, above the percent open. Those are the things that you need to create for yourself. Is this a buy? Is it just news? If it's just news, you shouldn't just buy. You need more. You need more buy indicators, and that translates to this page right here for profits and losses. Yeah, this is a good example. Felix, he separated this to all the puts that he has highlighted. Basically, all of these 0 days held. Except the biggest one, Nikola. Mike had a really strong conviction for that one, and he had a really nice win.
That's
3,006, a whopping 3,600. That's amazing, man.
Yeah, that was my
Um,
biggest trade so far, like biggest single trade. And you'll notice, like Fro said, all of those puts have either 0 or 1 days held. The only reason why the Nicola had 5 days held on those trades was it was such a unique situation where the company was pretty much a fraud, and GM had a partnership with them, and then they pulled out of their partnership. So it was like a no-brainer. I was totally comfortable shorting that thing all the way to the ground if I had to. I would have had it longer if I could, but it was going to expire soon, so I had to sell it.
I wouldn't say fraud. I would just say very questionable. Very questionable.
Very questionable.
enough to do a put.
Oh man, and our biggest loss with Pfizer totally went against us.
That was my biggest loss.
That was
This is a classic. The price was built in. If you see a stock going up, 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 up in anticipation of a news, right? If anticipation between earnings, anticipation before something big dropping. Like, wow, this something's gonna happen. Something's gonna happen. I gotta buy now. That's what happened, and I forgot about that rule, and I bought at the top. At the top, right before the news dropped, and the next day it tanked. And silly me, hope is not a strategy. I had hopium, and hopium would be the death to you. So I held for I held for a couple of days. Look at that, right? 10 days, 10 days of pain, and I was like, it gotta go up now, right? No, it doesn't have to. That's why you have these strategies. I started developing a 5, 9, 20 to my personal trading strategy. I back tested it, and if I followed that strategy, I would have never got into this trade in the first place. And actually, I would have gotten out way sooner. I actually had the market open when it went against me. So
it was
lesson learned.
because we put in so much research and we're talking about this as kind of like a main topic. So a few of my friends actually got into it. Danny, being one of them, and he took a $20,000 loss on this trade. I felt so bad, but at a certain point, he thought it's really similar, right? He thought it's gonna go up after like a couple of days to sell off, but it's just going down. It's a huge loss, but I mean, he knows the risk that coming into the trade. Hopefully, he can get it back with some of the future plays that he has. But yeah, I mean, if we lose together. That's the beauty of it. We're gonna learn together, and we're gonna learn like the different mistakes that we made over this trade, and use that as leverage on a future trade, right? So how we see it is kind of like an expensive lesson, like things from a Harvard course, and we're getting practical knowledge out of it, and there's honestly nothing to lose, and then coming in with that mindset, I feel like that's how you're gonna become a better trader, right? So. Love it, guys.
Absolutely. I mean, if you look at these losses, 1,900, 1,400, 1,400. Even with those big losses, we still ended up green as a whole for the month, up 17K. So you can't expect to win all the time, and you definitely shouldn't be just blindly following anything that someone says on the internet. But losing is part of the game, and every single loss that you have helps you to tweak your strategy a little bit more until you find what really works for you and your personal preferences and your way of trading.
Love it. Just end up like one of those guys on Wall Street. You can pull up with a deal post or pretty much working on this farm. But essentially, these guys do YOLO calls or YOLO puts. Like they will put their entire life savings into a single trade just because of one post of someone pretty much saying a little bit about the stock. They would just go on into it. So no research, no due diligence behind it. I mean, these people are crazy. Have you guys been looking at this forum?
I have not.
It's funny now. There's so many funny ass memes. Like, I don't like they share their trading experience with
Yeah, don't be silly, guys. Don't. I mean, gosh, you're gambling at that point.
this guy.
Was his average cost 50 cents? He did way out the money. And that could have again easily went against you. And the
On
odds of this
GameStop of all companies, controversial if it might go bankrupt, might go to the moon. You really don't want to be putting your money in those kind of stocks.
if there's any stock that you're gonna do for the long run, obviously it's the blue chip companies like Apple, Netflix. The FANG stocks. Those are good stocks. But yeah, overall we're positive. We have a lot of we have a good amount of wins than losses, and incorporated in these wins and losses, bear in mind that about the 80% of them did not even include our new strategy, right, with the EMAs. So with our new strategy, we're expecting with our back testing, the reason why we've adapted our buy and sell signals is because we've back tested and we looked at dozens of charts individually, and even together. We said, you know what, this is probably the best time to sell and buy. It may be different between Felix, Mike, and I, but generally it follows that same exact pattern. It removes the emotion, and that's what you need to do as a trader. And that's what we're doing here at Sigma Capital and Young Money. And we're just trying to make a bunch of money over here in the pandemic. And the cool thing about this is that it's a skill that if you keep on building, it's for life. It's that's the really cool thing. It's a hobby that could turn into a life skill. And the more you trade, the better you get, and the more money you make. So, cheers, and thanks for listening to us for this segment. I hope you guys learned something.
Yeah, if you guys have any comments, just drop them down below. Any topics that you guys want us to go over, or any potential plays, like put in your, whatever stuff that you guys are looking at, and then we're pretty much going to analyze it on the next episode.
So we see you guys again next time. Thanks for joining.